What up, my devil? Sensei-tutum here with another video for you. So today you're basically getting another one of my pre-market ponderation videos, except for in this instance that we happen to be at a pretty important point in the market, nearing at an inflection point potentially. Those are always the most concerning points in the markets, especially with a little bit of news we got on Friday about this Omnicron. Or was it Thursday? I don't know. This Omnicron variant to the corona. So yeah, what do the charts say? Well, I think that that Bitcoin and S&P, which are the two most important assets for my analysis and bearing on what I want to do in markets, are sort of at that, like I say, an inflection point, nearing an inflection point. And I imagine that most people that listen to my stuff sort of think of those in the same way. So I think that you'll find value here. And if you don't, maybe the next one. So, okay, Bitcoin first. So what we have here on the bottom left is really the main thing that we're concerning ourselves with is the geometry. Of course, the count as well, but that is always ever prevalent. So on the left look, we have a linear look. On the right, we have a log look, and these are more zoomed out. And then up top, we got some lower degree looks. So we're going to start out here, talk about implications and potential scenarios on this level. And then we'll zoom in and talk about the lower degree and how I'm going to play this. And like I said, I'm going to put this out in public. So this is going to be, as I feel like all my public videos are, it's great value. It's just you guys, it's hard for me to hold back in these videos, right? So I just release way less to the public, which is probably counterintuitive. I could do like a lot of your big time crypto TA YouTubers and just be cryptic and like trying to like conceal what I do behind a veil. No, I don't think so. I think I can tell you a lot, be very informative, and pass along the knowledge that you'll know that you can't, that there's certain paths to becoming an expert, and the shortest path is probably through the Trade Devils Discord and TradeDevils.com. But if not, then, anyway, that's the whole point of this YouTube, right? Is I'm trying to get you to join Trade Devils, but I'm not trying to just sit here and chill. So moving on, you'll find great value here. In the linear look, so let's just go ahead and I'm gonna switch to a blank chart. What is it? Okay, let me zoom out. So basically what we're at is two different potential scenarios. Is that, and I'm gonna try to keep this shorter, so I'm not gonna get too much into the in-depth explanations of things and just kind of cut to the chase of what's going to happen potentially, like what are the potential outcomes. I think that'll hit the biggest audience anyway, and if you want to be nerdy about it, you can do it in the Discord. But basically the two scenarios, the two largest potential outcomes are that we're going to do this, right? There's that one, and then there's this, or some variation of these, right? But these basically cover the bases. These cover the bases of the potential scenarios that we're waiting to unfold in front of us. And when you're at this point right here, where your TA, and for many multiple reasons, confluence factors, is predicting a turn, it always gets a little nervous, because typically if it blows through these levels, then then this scenario becomes a very real possibility very quickly, right? There is always the, when I draw these two things, there's always the potential that this just shit goes off the rails, right? And it just goes straight down, right? I mean, or it could do, that forever, or, it could, just go straight up, right? Basically, there's always the potential that our scenarios, our probable outcomes, can just be wrong, right? It happens plenty. But we work on, probability and tendency, And that's all we can go on in TA. There are no certainties. Probability and tendency is what we work on. And based on those, these are the two most likely scenarios. And it doesn't even matter to me which one you think is more likely in the way that you should play this, in the way that I'm playing this. Whichever one of these scenarios is irrelevant based on these two probable tendencies to predict outcome. Okay, let's go back to Coinbase. Okay, so as we show here, we'll go back down to 4. As we show here, we just show the subwave count, which could end up being, and I won't even talk really about the large degree counts, but basically it's either 1, 2, 1, 2, or it's A, B, C for a zigzag, right? And then those are the two subwave structures of this pattern playing out that would give us our two results that we discussed. So the more bullish of the two, the 1, 2, 1, 2, sort of gives us a line in the sand, basically in this area on linear arithmetic, and it could already potentially, we did pivot here on this level, and that could be the bottom, right? And I don't quite think that it is, and I'll talk about that here when we zoom in. But should it not be, if we were to break these areas significantly, that could be an indication that even if we do retrace, maybe it's going to be this, right? Or, the scenario that got us down to here, right? Or that maybe that potential for the whole thing to be going off the rails is happening and it's just going straight down. And even if it just goes straight down, this is still a highly important area, right? Even if the two probable scenarios that I showed don't play out like I drew the polylines on that last chart, if this happens, I'm still going to be extremely interested. And I do want to remind you, you guys saw this on the public YouTube, I'm almost positive, so feel free to go back and zoom it. I'm sure, I don't even pay attention to Twitter or any of that, but I'm sure that the purported TA experts are out there showing scenarios that have us going to zero. They always fucking do, but they don't, and they're there, of course, but that's, a horrible way to approach application of this theory in a profitable manner. Let's put it that way. Anyway, I'm stopping short of saying you need to think about this theory like I think about this theory, but I said it, so I'm not stopping short. And I don't think that very few people do. And the ones that do, I know, do well. Let's put it that way. Anyway, so back here, I was telling you guys that, hey, this is getting to be toppy. And we did continue on from the time that I said that. I said I wasn't calling it top, right? At the time, because I don't do that. But we're getting toppy. And when we do retrace, this is the area I'm expecting to retrace to. And then we retrace to here. And just to tell you guys where I've, approached this all the way through. And I've said this certainly in the private Discord on many, many private videos. But even in public videos, I know for a fact. So go back and watch them if you would like. But we were buying here, basically, with conviction when the Twitter sphere was calling for much, much lower. We're buying here with conviction when the Twitter sphere was calling for much, much lower. And we are buying here. And I don't know what the Twitter sphere is doing. The conviction level at this point, compared to these two, isn't nearly as good. But it's still good, right? So, and the reward is quite high. The potential is quite high, right? But the risk is a little bit more risky because of the very real potential for this to happen, like I showed. Of course, that existed here and that existed here, almost exactly the same, right? It's just that where we have advanced to at this stage, the whenever you look at a chart, you should instantly see. Let's just say you're pretty decent Elliott, and you instantly see all the possibilities of the Elliott wave, right? And each one is like its own little bar chart, right? Its own little graph of, say it's a graph, and each one fills its level on, hey, this is probable, this is that probable, right? And as we've advanced through this pattern here, the bar for this, the probability bar for this move has increased, right? So that's why this isn't quite as good as here and here when I was loading the bags. So I'm not loading the bags as heavy here, and a lot of that's because I loaded the shit out of the bags back here, right? In any event, I am loading bags up here, and should one of these more bearish scenarios come to play, I've got a plan for that as well, and hopefully through your own analysis and consideration of this video and similar ones to it, you can have a plan for your own money. Okay, anyway, moving forward, this was the linear. These are this is sort of a fat line in the sand that we're at, right? Zoom out, let's see what all this is about. Okay, moving on. This is the logarithmic chart. Won't linger here too long. So this is your line in the sand here. Well, we've actually already approached the line in the sand, the first line in the sand for the logarithmic, right? It's here. And we've actually broached it, at least the way it's drawn on this chart. We certainly have. Okay, so, but that's the first, right? Where it comes all the way down to here, and the level of importance on these is much more. So yeah, that's the line in the sand on the log chart. And I do believe we will break to the downside, and we'll go to the zoomed in charts to talk about why. Okay. And at this juncture, I think it's safe to say that I also want to throw in there this injunction that, again, while the larger count, whether you have this as a zigzag or 1 2 1 2, or this is the all-time one, and then we're gonna go all the way down to 3,000 or something, put in a mega bear multi-year 2, whatever, however the hell you're counting it. Why I think the 1 2 1 2 is the contender for the lead at the moment is simply because the same reason that I think that the calls for 3,000 or whatever, 0, sub 10, sub 15, the reason that I think that those calls are misguided is because we don't end on a 3-wave high, right? What patterns end on a 3-wave high? Reactive patterns within a correction, i.e. B's and X's. So if this is a B or an X, we don't expect C or Y to advance. It could happen, it can always happen, but especially in a sideways style, right, you expect to come back to here. So when we're using probability and tendency of the probable scenarios, the most bearish just comes back down here. Okay, so even if you're mega bear, I don't think you should sleep on this area, which is going to be highly important. Anyway, that degree, right? That's why at that degree, I don't think that we're gonna trigger these massive multi-year bears, right? Because of that. Well, guess what? On this degree, same shit. We finished on a 3. Listen, I don't care if you can force an impulse in here. I doubt that you can. I don't care if you force your motive in here. This the way I practice, and I always do this, and I stand by my guns, and I don't care what anybody else thinks. I think that yeah, I'm pretty conceited and pig-headed in that I don't care what anyone else's opinion is when it comes to an Elliott wave pattern. I think they should care about mine, but I don't care about theirs. And I said that, it sounds like I'm an ass because I am, but that's just the way that it is. And so anyway, this is a 3-wave pattern here, and I'm going to say that with as much conviction as I possibly can. Okay, so this should not end. This move, this should not be the top of this move, right? it should not be the top of this pattern, this whole thing. It should not end on this 3-wave high and then correct all of that, you know, as a C. I.e., it's more likely that this is a 2 or B of some sort, right? Or an X or something like that, right? That this is corrective, reactive corrective. So advance, reaction, advance, flat wave. Where, so in a flat wave, we have a 5-wave impulse C. And if we, you know, the sub-degree structure on this thing is shaky. And I don't want to get into the nuance of the theory and talk about it, but let's just talk about the dominant swings. Right? And the subwave structure, the apparent subwave structure of these dominant swings is advancing in 3s. Clearly this is big 3. But this one has not sort of made that. So that's one reason that I think that this is unresolved. Now, this isn't a valid expanding diagonal, which these, if you're paying attention and you saw these, you might be thinking that I'm showing it's an expanding diagonal, and I'm not necessarily, because while there is room to allow for a diagonal not to overlap, it's just pretty damn rare, right? And the I always like to tell members that leading diagonals especially, but this would be an ending, you know, unless it's the super bear scenario, it could be a leading, right? But diagonals in general, although I find ending diagonals at the end of impulses, not like C's, to be quite reliable and easy to play. But these types of diagonals specifically will steal your lunch money. So if a standard one that meets typical expectation will steal your lunch money because you're going to be wrong picking it, then one that's, you know, doing this atypical thing is certainly even worse to think about. But all of that aside, I'm not calling it a diagonal, but I'm, you know, I think it meets, you know, you can obviously count this as impulse, you know, 3, 3, 5, 3, 3, 3, and then, you know, basically a tiny 2 with a big 4, which is what you're probably going to have to do, and then, you know, 4 here. But I like to shape it this way, and that my expectation for this is that basically wave 5 is going to be longer than wave 3, as in 3 is longer than 1. So I'm thinking that we do basically get down to, and not to mention, if it's going to be sort of 3, sort of like this is a 3, sort of like this was a 3, you know, and this one was, this third wave was much shorter and lazier than the first, and this one was lazier and similar magnitude but shorter. So let's even get this a little bit more bullish thinking. But and then this, and this is the, out of all these retracements that you've seen on all the charts, this is the only one showing the log, because the price differentiation here isn't quite enough to merit log, but I don't want to ignore it. So this is the linear, right? You know, we're right around the 50, right? But I don't want to ignore this log completely on all these charts. So now, if this were to extend to the 618, the length of, let's get down even further. Okay. So if this next wave were only to extend the 618, the length of the first, meaning this one, okay, does it change? Changes by a couple thousand, actually. No. Doesn't. Nope, it's a couple $100. Okay, so I was just checking the difference between log and linear. Okay, so if this were to sort of advance like this one and only go here, and we're gonna have to just be watching it, right? It's gonna get real sleepy into like that. Oops. Real sleepy into this area, or does it go more like a 1-to-1, where we sort of come down into, let's see, like that. Now, So let's zoom back out to, so that's around 50. This is around the 52. That's around the 50. So if we're looking at now the cursor, so I'm moving to the top right, this area, first we have this area potential, which is on these two charts. So if you're looking at the top right where my cursor is, but you can look over and see the crosshairs in the top left as a significant area to retrace to. Yeah. So this is definitely the first significant area to retrace to. Other than where we're at, which is obviously the first, but we were there, and I don't think that we're done, especially based on this price action. Now I'm in top left. I'm jumping all over the place now, so you're gonna have to keep up. Top left, based on this being, you know, this is a very shortable pattern. Let's put it that way. It's a very shortable pattern. To sort of these sort of levels, right? Of course, we do have this holding it up. Break of that, short to that. So on the very low degree, at my trading degree, 2 to 5 minute, I'm certainly short bias, by the way. But up here at the 15-minute beyond, let's say hour beyond, I'm more long bias to add to back sort of. But at the trading degrees for leveraged trades, I'm short, right? So I'm gonna be shorting into longs kind of thing. Coming up, this is anyway. So if we're coming, so we'll go to the bottom left here, and the reason I want to show everything is basically to show that we showed these levels of significance on this chart. And look, so if you look at the bottom right, bottom left, and top right, so these are how these areas are confluencing, right? This is the confluent area, and then down here, confluent area, top left, top right, bottom left, bottom right. You're looking at all of them. And then, so that now we're going over to, my cursor's going to from the bottom left to the bottom right. And that orange line, which is highly significant on this chart, or at least has the potential to be, we were just on it. It's basically all these things, all these charts, and then moving up to this area that to drop down next to is that 50 on the top right, and then using this lower degree. So basically, you got all the tools right here, and this is obviously going to go up to the paying Discord before it goes up public. But I'm just, you know, basically going to wait a few hours, and, you know, I'm not going to necessarily wait for price to do anything. So this could still be very, very useful for the public, even at the lower degree, and certainly at the 1 hour beyond time frame, but of usefulness for the public guys. But you Discord members, you might be able to take advantage of this. You know, let's just go ahead and get in on it real quick and see if we're setting up for anything. Oh, it's a triangle. Potentially. Is it? No. Because it would have to be, oh. It would have to be like, something like that, potentially. Or is it more... whatever it is, it's corrective. You know, it could be A, B, or maybe even W, X, Y for double 3. Could be a triangle in play. But suffice to say, I don't think it's resolving. It's resolved. I don't think it's resolved, right? So I still think that no matter what it is, we got another up thrust. We got another push higher to offer better short entry before taking some sort of short right here. And that when we are shorting, we're just going to go. I'm going to be very careful here. Whenever it hits this line. So let's just. Whenever it's this line, I'm going to be very careful. And then really just to like this level. Something like this. I don't know. We have to see how it plays out, right? When it does eventually drop. But suffice to say, I don't think that there's any timed entries at release of this. I'd like to see it come back, you know, even if it meanders down some more, come back short at this level with, you know, sort of that potential in 52-ish in mind. And then again at 52, that's where we're starting to think about big time potential for turnaround. So yeah. All right. Oh shit. I got to talk about the ES. We're almost 30 minutes in. All right. This is quick. Basically, I do this every time the ES corrects. People are calling for the end of the fucking world. Again, there is the Omnicron that has now come out. Just so happens that the news over the weekend that's filtered through about the Omnicron is that it's a little bitch. So bullish. It coincides with the chart inflection point. We've broken this trend line several times. Doesn't mean we can't break it again. So even if we do break it, but we've also held up on this thing multiple times. So I think that we're at an inflection point. I think that we're going to reverse, whether it be at this line, just through the line, maybe to this area, and then reverse, and then all-time highs. Omnicron's a little bitch. And if it turns out, I mean, this is probably weeks down the line, but I'm sure as soon as they confirm that it's a little bitch, even if the vaccines aren't protective against it, everything so far says that Israel has, of course, they're almost fully vaccinated as a country, which is pretty incredible. But their cases have shown very mild symptoms for people that have been vaccinated. The South African doctor that is alerted it to everyone has said that he has only seen very mild cases of it with atypical symptoms, i.e. no smell, taste problems. It's like a cold, right? Potentially. This is also so early. But he's the one, the South African doctor is the one that alerted the world, where it's been showing up a few other places in Africa first. Didn't originate there. Not that I'm the CDC. But this is just what I'm reading in the news to show you what is supporting the chart's narrative, right? And I think that less than 10% of Africa as a continent is vaccinated. I don't know what that means for South Africa. I imagine they're a little further along than some other countries down there. But I'm guessing this guy's seen, it's so early, but I'm guessing he's seen cases, unlike Israel, without vaccination. And he's saying it's very mild. So if this thing, and then this is now Toot playing, sometimes I play economist on here for you guys. This is Toot playing virologist. I watch the fucking news like the rest of you, unfortunately. Actually, not that much. But if this thing can overtake the prevalent strain out there now, Delta, as the most prevalent strain, and it's way less, potentially, and if it is way less dangerous, this could be really, really good market news, really, really good opening the world news, right? In a lot of ways. But, of course, Omicron could be fucking terrible and the worst, blah, blah, blah. And that's what you're probably going to be led to believe until some officials come out and say some things pretty specifically. So we'll see. That's the thing about the narrative that could, if the news official, if the medical officials, if it is good and the medical officials are quiet about it, and the mainstream media is got out their hooks and everybody, we could be down to here before they say anything. But we'll see what happens Monday. Hopefully it's potentially bullish. If it is, to me it just coincides with the chart. And everybody will be saying, that it went down super hard on Friday because of the Omnicron, which we've been watching this. We've been watching this the whole time, right? Saying that when this failed breakout happened, it was a short. We've been saying that the whole time. Anyway, they'll be blaming that on Omnicron, and they'll be praising this on the Omnicron positive news if it were to bounce on the trend line or just after. But I do think that these are, per the chart, the most likely scenarios. Why? Because it just happens over and over and over and over again. Maybe this will be the top and you can short it down to here. Or you could just long it again and long it again, long it again until, it doesn't meet the standard behavior, right? What we see in Wyckoff, we call the change of behavior. Maybe you could long it and just, follow the tendency until it has a change of behavior. So far, it has not. All right, boys, 31 minutes. That's a long one. But yeah, so hope you enjoy. Good luck.